Hey y'all, Katie here with Team Evoazy, and welcome to the Arizona Monthly Market Housing Update with Matt and Katie, where you learn all about the greater Phoenix area housing market, including information on interest rates, what's happening with housing prices, and tips and tricks for buyers and sellers. Please like, subscribe, and download our episode so that we can continue to get this real news out to the real people.
What's up, everybody? We are back with our monthly market update. It's Katie and
Matt
and
Ryan.
What's up, guys? Hey, team.
Hello.
Hello. So how is August treating you so far?
It's hot. Looking forward to it cooling off a little bit. Yeah, I think we're all feeling that pain right now.
It is a little warm. I think I saw a stat. For those of you who don't know, we are in the Phoenix, Arizona area. I think I saw a stat that we did not get under, 112 for the entire month of July. Was that right? I think it was 112.
I don't know.
Feels right.
Yeah, it somewhat feels right, but then at the same time, like the good old sensationalism in the media has been capitalizing on Arizona and its heat.
Like as if it's not normal.
Yeah, and if anything, the last 2 or 3 years haven't been normal because it was a lot cooler, a lot more mild. All last summer, it rained. And no one was saying, oh my God, this is an anomaly. But now we have back to normal heat and it's like, oh my God, the sky's falling.
Yeah.
But, you know, I don't think that should deter anyone from thinking that Arizona is an amazing place to call home.
Totally agree. I mean, I've been living here nearly 20 years. And with the exception of a couple of years, like you mentioned, July's always like that.
It's in August too. You know what I mean?
Yeah.
July and August are usually like really hot. And it's, you know, it's what happens. You know, I think the hottest on record is
it's a dry heat, right,
Matt? Yeah.
Yeah, it's a dry heat. It's a dry heat.
That's what we all say, you know. Yeah, it's 112, but it's a dry heat. So
dry heat, flip flops. It's all you need, you know. Margarita, and you're golden. You know, boss might not really like that at 1 o'clock in the afternoon, but you know.
Hey, that's okay. So let's talk about activity out there, guys. Maybe start off with rates, Ryan, if you can give us just a little sort of snippet what's been going on. I know we had some news come out from the Fed. What was it last week with their meeting? And so fill us in. What is happening on the rate front?
Yeah, kind of a lot to talk about. So, you know, last week, you know, like you said, Katie, the Federal Reserve, they did hike the funds rate by a quarter. Now, this was expected for a while, you know, and mortgage rates in the stock market had already priced this news. So the focus was actually on what the Fed Chair Jerome Powell's comments were going to be about future rate increases. And during the, you know, question and answer session, which is always interesting to watch because, you know, anything that Jerome Powell says during these meetings is a real market shifter. In a second, you know, you'll see stock markets either jump or drop. It's really interesting to see the response. But in the meeting, you know, Powell acknowledged that the inflation reports are coming in lower than expected, like we mentioned last podcast. And he did say that he needs to see more data before deciding to hike or pause during the next meeting, which is September 19th and 20th. So, you know, there'll be a lot of economic data reporting, you know, before this meeting. And experts feel inflation will continue to drop. And what that will do, it should support a pause in the rate hikes for the rest of the year. So, you know, this news was very positive for mortgage rates. And, you know, they improved last week. You know, they had a significant improvement. But, you know, it's a big but. This has been a theme for the entire year now, you know, as we discussed a lot. You know, rule of thumb is, you know, when inflation goes down, mortgage rates will drop with it. So there's been a lot of pressure this year for rates to be lower than where they currently are. Mm-hmm. But, you know, there's been unexpected economic events that have really held us back from significant improvements. You know, it's the only predictability is how unpredictable these things could be. So, for example, you know, the debt ceiling, you know, Saudi Arabia, they reduced their oil output, you know, better than expected jobs reports, things like that, which no one has control over. And now, you know, yesterday, the United States, I'm sure a lot of people have you heard in the news, it was reported a lot that, you know, the credit rating for the United States was lowered from AAA to AA+. So this was largely in part to what I mentioned, that debt ceiling, you know, that barely passed before the cutoff. So you might have seen yesterday that the stocks, you know, dropped because of this, and mortgage rates, they did increase. So, we're still, not getting the big drops that we were expecting this year. But, we're hoping that during the next Fed meeting, like I said, is in September, they will pause the rate hikes, which would really be big news. And that should really start the significant drop in rates for the year. So that's where we stand.
Yeah, so stay tuned, guys. How have applications been as far as incoming applications since the last time that we spoke last month on the podcast?
Yeah, they have been a little bit slower. I know before the taping, we kind of were talking about it, and it's hard to say why. Maybe the weather, maybe, kids are getting back in school, maybe a little bit of the uncertainty of where rates are going to go, maybe the news of the rate hike, because I know there's still some confusion on exactly what that means. But over the past 2 weeks, we did see things a little slower on the application front.
Yeah, and we've seen that also just within our buyer pool. We had a bit of a spike, just a few weeks ago, a month ago, whatever, we had quite the spike, and then it started to die down, and it seemed to match up with the timing of the really hot weather. And so, but that's pretty typical, right, Matt? I mean, we've been around the block a couple of times, and we see the seasonal, and you too, Ryan, like we see that sort of seasonal movement throughout the year. We kind of know now when our busy times are, and typically July and August is quiet. I mean, you got kids getting back into school, you've got people still finishing up family vacations, that kind of thing. What's your take on that?
I think there's a lot of things that contribute to it. And, definitely think heat is one of them. I think just the normal summer. I think, there's been some in Arizona, a lot of school districts change the amount of time that they go to school in the year, or at least when they start school back up. And they've kind of elongated their vacations during the normal year. So now their summer vacation is shorter. So therefore, a lot of students ended up going back to school a lot earlier, about a week to 2 weeks earlier than normal. And that definitely throws, I think, some salt in the game for some people. And then, you take what's happening kind of with heat, but I think that's just a normal seasonal thing here in Arizona.
Yes.
The other side of it is I kind of look at our seasonal spikes, and we look at it, we charged well past 4th of July as far as what we saw as people engaging in multiple offers and just a more demand than usual. So I think we're now definitely just seeing the normal summer lull. We always get a summer lull no matter what, unless it's like the middle of a weird pandemic year. But I think that's exactly what's happening. The other thing I think too is people are sensing that we have a very low inventory. So with that low inventory, people are squeezed with a lot of emotion. They definitely don't want to get in a bidding war. And then if they are looking to upgrade, do they really want to get rid of the home that they have such a low rate on to make that change? And a lot of people are going, you know what, after they pencil it out, it's probably not worth it to them to face that right now, especially with rates kind of fluctuating the way that they are. So I think all of that kind of put together is just perfect for this little lull. Now, my feeling is like what Ryan was saying, come September, we're not going to, usually get our inflation reports every month, right, Ryan?
Yes.
And this is the one time where August is ultimately like, we're not getting anything. We're just now going all the way till September.
Yeah.
It's like a 2-month lag. That's a lot of time when you look at exactly like the volatile nature of our market and how, consumers and just everyone's been responding to these monthly reports. It's like, we're waiting 30 days. Now all of a sudden you double that by 100%, there's definitely a lot of uncertainty. But my feeling is to what you're saying, and a lot of other economists are like, they're very confident in the news to come out as far as inflation and things that could possibly, stimulate rates to go down. Now, the big question is what's going to be these underlying political wins and everything else that seems to contribute to this. The election machine is literally just getting ready to fire up because we are going to be 1 calendar year away from,
From presidential,
November
right?
4th.
Yeah.
So like, you know what I mean? It's right around the corner. So we know how that's going to go. Part of me feels like, and I don't mean to go long-winded on this, but we've said that in many of our podcasts, how there just seems to be this artificial nature to everything that we've experienced here since the Fed stepped in and really started raising rates to get ahead of this and everything that's kind of been happening. And I feel like that artificial nature is real, and it's political. And here we are now going into a year that's very big, and America's more divided than it's ever been. So therefore, these parties are going to be doing everything they can to get voters to respond. And my feeling is they're not going to do anything that's going to hurt them on, on the ground level, and that's going to be homes. If people are worried about where they're living, what housing costs are, that they're losing equity, it's just that's not good. So that's what makes me kind of hopeful that the rest of 2023 and 24 will actually be good for rates and real estate.
Yeah, agreed. Do you think that people are still listening and watching the headlines that are saying the sky is falling, the housing's crashing? I mean, it's what, we're more than halfway through 2023. I'm still waiting for the crash. I don't think it's going to happen. Like, do you think that is having a bit of an impact?
It's interesting. I think when you look at it, it really shows how resilient the United States economy really is. A lot of people were expecting us to be in a recession this year with, the funds rate as high as it is right now. A lot of people saving money rather than spending money. And like I mentioned before, when I was talking about rates, is the jobs reports. The jobs reports have been showing, people are keeping their jobs. There's a lot of new job openings and people are getting them. So, it's kind of interesting. The stock market's had a great year, it's up quite a bit. So I think it just kind of shows the resiliency. A lot of people were thinking there was going to be a stock market crash, there was going to be a crash in home prices, but we're not seeing any of that. Things have been very resilient. I know a lot of that has to do with, inventory in terms of the prices, like Matt had mentioned. And I thought it was kind of interesting. I actually saw a chart that showed that nationwide, we have about 1.08 million homes that are listed, that are active. But, during the crash that we had in 2008 and 9, we had, what was it? It was 4 million homes. Yeah. It was that big of a difference. But what's interesting is our population has grown from 300 million to 335 million. So you can see there's a little disconnect there. Population is going up. Inventory has dropped by almost 3 million. It's crazy. So, when you look at that, obviously, that's why we're seeing, home prices have such a rebound. I think I was looking at some of those numbers, and now the 5 big estimators of value, like FHFA, CoreLogic, Black Knight, Zillow, all are predicting between 5 and 10% increase in the next 12 months for home prices. Crazy. When we were talking not long ago, people were fearing 20% drop. So really interesting how things have flipped.
Absolutely. And our inventory levels are super low here still. I mean, we're hovering, Armless reported at the end of June, hovering just under 2 months inventory, which is really light. And Matt, I know that you've been paying quite a bit of attention for a long time to those weekly statistics. Where are we at now?
We went down a little bit for the last couple of weeks. And like I've said in every podcast that we do, I look at things a little bit differently. I pull what's for sale on the MLS based on just Maricopa and Pinal County. I don't use the MLS as a whole because it extracts information from all over the state, rural areas. And I just feel like a lot of that stuff kind of convolutes and changes what we're really looking, and that's Metro Phoenix. And what we've done is we've actually, we went down, it was like 0.5% in inventory. We were at 9,590 something properties. And that was in a 7-day period. The 2 weeks before that, we remained flat. We didn't really change much. All the months leading up to that, it was a minimum of a 2% change every 30 days. Now, when we look at where we are at from our high, which was November 1st of 2022, we are down 52% from that point in time. So I think there's, look at that, and you look at the time period in which we dropped 52% in inventory. You don't usually see that happen between November and June. That's not usually going to be a time frame in which we see that. It would actually be between now and that time period that we usually see that type of that movement. I think inventory, once again, is the thing that's playing this. And I think that it also speaks a lot to what's happening here in Arizona and the confidence in the real estate market. Our rental market's also flattened. That was one thing that I saw kind of trickling up here over the last few months, and it was pretty much wiped out all drops that it had from that same November 1st, 2022 point. And now we are about, I believe it was like right around 6% higher, or 3% higher, excuse me, 3% higher than where we were as far as inventory goes at that point in time. Obviously, the rental market's a lot different. There's a lot of things that contribute to that. And the stats that I'm pulling that are from MLS. I can't get actual data from Zillow. And Zillow is going to be the biggest platform for actual rentals. So I would like to really see what they see. And I think, that's why we kind of really put a little bit of weight into what they're doing, like new programs that they're coming out, things that they're trying to do. One of the new things that Zillow and Redfin just announced that they're doing is they're now teaming up with new builds. So they are now going to be almost trying to replicate the MLS. Kind of has it's an okay system for new builds, but it's not really engaged.
It's not super robust. Yeah.
Not super robust, not super accurate. It's not really intuitive. And Redfin and Zillow ultimately identified this, and now they have stepped in, which I think that's huge, because it's one thing that you look at in Arizona right now. They look at it and say, oh yeah, demand is a little bit soft in resale. One thing, and I don't mean to beat a dead horse with this, but it's also annoying when they take these convenient and they start looking at last year still, and they're saying we're soft compared to this. And it's like, I don't think we can do that. I think looking a year back is just, it's skewing the data. It's like, what we really need to look at now is what's been happening in 2023 and everything that's been contributing to that. So is demand really soft so far this year? No, I'd say it's pretty linear, and it's kind of been almost gaining speed considering what we've seen with rates and uncertainty. But then we look at our new build section, and there's actually demand there. They're seeing a big increase. All of the land purchases are now going up, and there's a lot of confidence in that arena. That's good. I really feel like we've always been able to look at new builds and kind of, not so much resale shadows them, but they kind of do in a sense. When new builds start to crash, we know, oh shit, that's going to really trickle into resale. If all of a sudden we start to see new builds start to pick up steam, that's when we know, okay, how far is resale behind that? And I think a lot of it's almost perfect, especially if you are a family that's looking to move and you're saying, all right, I'm pretty confident that rates are going to go down in the next 6 to 8 months, but they're not a big thing. I'd still be comfortable with using today's rates, but I'm pretty certain they're going to be lower than they are. Well, why not buy a new build? That's what I think a lot of people are chalking it up and saying we don't have to lock our rate in until it's time to close. But I think it's all good stuff.
Yeah. And Armless, just speaking to the whole crash in 2023 thing, Armless has an opinion about that. And that's Arizona Regional MLS. For those of you who don't know, we receive this report once a month. It's called the Armless Stat. And I really loved this line so I arrowed it and underlined it. It says that reports of our housing values collapsing in 2023 look extremely foolish. I mean, that's pretty black and white, and I totally agree with that. The line prior to that is when 2023 closing numbers are reported, it's not unreasonable to expect a modest year-over-year increase in median sales price at this point, which I think is really interesting. And, I'm still noticing just in our business and, the colleagues that I speak to that are representing buyers that are coming in on our listings, or just, those that I network with, we're seeing, and I even saw this on an article, we're seeing we're very much a destination area, very much a destination state location. And we're seeing a lot of movement from San Francisco is a big one. We're seeing a lot of movement from New York City is a big one. And I think Seattle is the other one that's like kind of the top 3. So real lot of movement coming from those areas into our state, into our metro area here. I want to go out on a limb and say most of our listings right now are under contract with out of state buyers. So we're still seeing a lot of that influx.
You always got to apologize a little bit, like, hey, it's July and August. It gets better. Trust me. Weather gets better.
You only have to wear oven mitts when you drive for 6 weeks. It's fine.
Hang in there.
Oh, I had to laugh when I first moved here from New Hampshire, and there was some sort of joke. Of course, we didn't have social media back then like we do now, so there weren't all these memes and things like that. But somebody had taken a picture of someone on the freeway literally driving with oven mitts on, and I thought that was absolutely hysterical. But I moved in the middle of July, so I was like, oh yeah, that could be me.
It's true, and I can, when I moved out here, and this was a long time ago, I had a no money, really bad car, and I ended up having engine issues my first summer here, and it required me to drive around with the heat on.
Oh
So
no.
I had to like literally turn the heat on, all the windows down, and drive around. So if someone's really looking to pull the Band-Aid or get used to it quickly, just go with that route. The family might not like it, but
Yeah. Just get the old acclaim. Anyway, anything else that you guys would like to add before we sign off here?
No, I don't.
No?
I think just the last thing is probably just anyone that is really kind of putting their finger on the pulse and wondering if it's time to sell or buy, and I think it's a good time to watch that. I think it's like we've always said, it's a good time to prepare, make sure that you're engaging, asking questions, because everything that's happening right now is setting us up to see things change quickly. And
Yeah.
if, how that happens when things change quickly and you're not fully prepared, that luck is out the window, because that's when opportunity and preparation meet, and create your own luck. It's ultimately
Absolutely. All right, guys.
Great way to end it. Love that, Matt.
That's right. Well, happy August. Stay cool out there, everybody. We will see you here next month with Katie, Matt, and Ryan. And oh, by the way, if you want to kind of watch the trends, so we're here every month. We've been doing this for, I don't know, a bazillion years. And if you want to see what we said 3 months ago, 2 months ago, last month, and just kind of watch those trends, a great way to do that is to hop on over to our YouTube channel. We are at Team Evo AZ. That is our handle. Right at the top is this monthly market update playlist. You'll see it right away. Can't miss it. Subscribe to that channel, click the little bell so that you get the notifications. If you are more of the podcast type, you'd rather listen to it in your earphones, maybe you walk a lot, hike a lot, bike a lot, hop on over to your favorite podcast platform, do a quick search for Arizona Real Estate Radio. That is going to get you to our channel. Our channel works unlike many other podcast channels out there, where we push all of our content, all of our shows, all of our educational materials, including Tip Tuesday with Dana and Ryan, through that podcast channel. So subscribe, like, download, rate, do all the things, and we will see you next month, guys.
Bye, everyone.
Bye.
Bye, guys.